It's Tuesday, October 5th, 2021. Well, it didn't take long for the markets to rebound. Dow Jones up 311 points today. As Joe Manchin said, I'm not ruling anything out. So now that it looks like Joe Manchin is going to be on board with the infrastructure bill, everything looks back to normal. Everything's great. Cryptos skyrocketing, markets soaring. Everything's back to normal. The greatest economy in the world just needs more stimulus to continue putting along on life support. I want to get right into this video today. So much happening. Before I do, please make sure that you hit the like button and make sure that you are subscribed to this channel and share these videos everywhere. U.S. services sector shows further signs of struggling in September. U.S. services PMI fell from 55.1 to 54.9. But don't worry, markets are up today. Everything is fine. And remember, as long as the markets continue to get these bailouts, all this easy, free money being injected into them, they're going to continue to go up. U.S. trade deficit hits record high in August. Markets don't care about deficits. They don't care that you've lost your job. They don't care about wealth inequality. They don't care about opportunity inequality. All they care about is more artificial injections to keep limping along. The deficit has widened to a record in August, $73.3 billion. Dow Jones up 311 points today. Imports rose 1.4% to a record $287 billion in August. Exports climbed a half a percentage point to $213.7 billion. And so much for exporting energy. Petroleum products saw a net deficit in August. Clearly, China is dominating the United States of America. Clearly, there is no trade war at this point. China is dominating the entire world. And when you look at a record August deficit of $73.3 billion, now, most people understand this, but there are a few people out there that may not understand this. But that means that we have 73.3 more billion dollars going out than coming in. Now, if you ran your personal checking account like this or your checkbook like this, you would be bankrupt very, very quickly. And we now are the greatest debtor nation in the entire world. We can't admit this, but America is bankrupt. And this is how you bankrupt your personal finances. This is how you bankrupt a country, when you are spending more than you are taking in. And we've been doing this now for decades. And at some point, we are going to pay a catastrophic price for all this spending. We don't manufacture things. We don't make anything. We're exporting we're importing more than we're exporting because we don't make anything, and we have more money going out than coming in. And this is going to have a huge repercussion on you, your kids, your grandkids, and really the status of America at some point, the world reserve currency at some point, our status as a world superpower. We cannot continue doing this. I think, and I hate to say this, it may already be too late for America. I think China is going to be the new superpower. And unless a miracle takes place very, very quickly, that's where it's going. New vehicle sales plunge as prices soar amid supply chain chaos, chip shortages, and depleted inventories. Total new vehicle sales in September dropped to 1.01 million vehicles, down 37% from 1.6 million vehicles in March, when there were still enough vehicles to sell. The seasonally adjusted annual rate of sales plunged for the fifth month in a row by 29% year over year. Supply has been thrown into chaos by the semiconductor shortages that has triggered plant shutdowns globally. And this Thursday, we will get the first-time jobless claims for last week. And again, they will more than likely be over 300,000. Who in the world is now working in America? many people are too scared to go back to work. Many people are too lazy to go back to work. And we have too many people losing jobs, over 300,000 job losses a week for 18 months. And yet the Dow Jones, markets across the board up today. Do you think this is not manipulated? You think that there are no magic tricks going on here? How in the world can you have markets going up when we're losing this many jobs? We are shutting down automakers. We have a semiconductor and chip shortage. We are seeing the biggest debts and deficits in our history. And there's just so many things upside down right now, yet markets are soaring. Now we have China flying warplanes over Taiwan, markets up today. Let me explain one thing here, and most of you know this, but Taiwan manufactures over 50% of all semiconductors used across the world. If China invades Taiwan and they take over Taiwan, what do you think that means for the United States of America? What do you think that means for the globe? You, at that point, will see China as the world superpower. They will have control of over 50% of the production and manufacturing of semiconductors because, well, see, we don't make them here. So we're dependent on other countries like Taiwan who are in jeopardy of being taken over by China. And if that happens, it's going to be a whole different world, ladies and gentlemen. Here's another article coming from The Hedge today. Retail's bankruptcy bloodbath is over, but these 26 companies are still at risk. Chapter 11s have slowed down in 2021 thanks to the government's stimulus, all the cheap money, allowing people to come back and shop because people weren't paying rent. They were out shopping. They weren't paying down their debts. They were creating and acquiring more debt because the government was giving them more money in stimulus checks and benefit checks. But how long does this lull last in regards to Chapter 11 bankruptcies? Supply chains have been busted. Cost at the store continues to skyrocket. And the consumer is running out of money as all the benefit checks and stimulus checks dry up. So who's at risk? Moody's ranked companies with a C rating, and some of these companies with the C rating, you may know who they are. Rite Aid, Board Riders Inc., 99 cents only. Party City, Premier Brands, M&G Holdings, which is Neiman Marcus, Men's Warehouse, J. Jill, Bell, Talbots, just to name a few. These companies were in trouble way before the health crisis. And we were seeing so much trouble in the auto industry before this crisis, in retail before the crisis. And now we're seeing these companies in much, much worse trouble than they were before. And now as the money is running out, we're going to see how this all plays out. How many more companies that aren't on this list right now are in big trouble? Companies that have not been paying their rent, have not been paying the leases on their buildings. We don't even know. They're not even telling us. But I'd love to know who's paying the rent. We just saw the news the other day. I did a video on it. 51% of all U.S. restaurants did not make their rent payment in September. How many retailers didn't make their rent payment or their lease payment? Comment down below. Let me know what you're seeing in your areas. Are you seeing more businesses closing? Are you seeing some openings? What's really interesting is I will see construction of new retail space, yet right across the street, I will see vacant retail buildings. We'll see, at one corner, a new gas station going up, a new restaurant going up, and drive down a mile down the road, and I'll see 2 restaurants and 3 retailers out of business. It's really bizarre. This one comes from CBS Minnesota. Smaller products, rising prices, shrinkflation hitting grocery store shelves. You're not getting as much as you used to. Most of you already know this. And while you're not getting as much as you used to, you're paying more. The article here in the CBS article gave a couple examples. Oatmeal packets of 10 have been cut to 8. Tuna cans have gone from 7 ounces to 5 ounces. Cereals that were once 19.3 ounces are now 18.8 ounces. Huggies diapers and Cottonelle toilet paper announced they will charge 4 to 9% more through 2020. Razor blades, detergents, prices are spiking. Breyer's ice cream. Used to be able to buy a carton of Breyer's ice cream. It came in a 64-ounce carton. Now it's 48 ounces, and the price is up 25%. So you're getting nearly 20 ounces less and paying 25% more. I don't know about you, but it's not just the price or the size of these products, price going up, the size of the product going smaller, but the quality of these products is lessening. The quality, you're getting less quality, not just less food, but you're getting less quality. And I would love to know if you're noticing the same thing. Comment down below. What are you seeing? I did a video last week. I picked up a pack of bacon. It's 10 ounces, not 16. I picked up another one. It was 12 ounces, not 16. And it's costing more. So $5 and change for a 10-ounce packet of bacon. Are you seeing the same thing? Let me know. Give me your thoughts and quality. What are you seeing in regards to quality of these foods? I can tell you, the cereal today is not the cereal of yesterday that I grew up with. The quality and taste of the cereal, I don't even eat cereal now. It's horrible. Here comes another one from CNBC. Even with low interest rates, mortgage payments are increasingly unaffordable. A medium income household would need to spend 36.2% of its yearly income on a medium-priced home, the Atlanta Fed reported. The median existing home price reached a record level in June 2021. The 3-month average rose above $340,000. That's a 23.8% increase from June of 2020. I have no idea how people are doing this. I look at the price of cars, and new or used, it's unbelievable what cars are going for now. And you look at the price of a home, $340,000. You're not buying a garage here in Southern California for $340,000. But regardless, wherever you're at, it is absolutely ridiculous now. What it costs to buy a home. Yet rates are low, but the price of the home is skyrocketing, and it's pricing people out. Now it's taking first-time home buyers an extra year to save for that 20% deposit because the purchase price of the house has gone up so much. So the artificial low rates and the institutional money competing against the average American is driving prices to the universe here. And they're pricing out the average American, they're pricing out the first-time home buyer, and they are causing the biggest housing bubble the world has ever seen. And as we all know, all bubbles pop, and this one will be no different. It will pop, but the damage from this one and the fallout is going to be so much worse than anything we've ever seen. It is going to dwarf what we saw in 2008. So they are causing huge problems in the housing market. I think it should be completely illegal that institutional money is competing against average Americans to buy a home. And it is promoting and inflating such a giant housing bubble. And because of this, the fallout and destruction of this bubble when it bursts, it's going to be historic, and it will probably cause other bubbles to burst also. Just think of what is related to the housing market and construction. When it goes, you're going to see a lot of jobs go with it. You're going to see people in banking. You're going to see banks, I think, get swallowed up in this and destroyed. You're going to see people in construction and finance destroyed. You're going to see people who took a huge risk and have been living way over their heads to say that they bought a house because they bought at the worst possible time in the worst housing bubble of all time. These people, many of them are going to be absolutely obliterated. So be very, very cautious out there. And look, at the end of the day, it is just getting harder and harder for people to survive day to day, whether it's buying a car, being able to put gas in the car to drive it, to put food on the table, to make the rent payment, the mortgage payment. People at this point are hanging on by a thread. And we know that just 2 years ago, that 80% of this country was living paycheck to paycheck. How in the world, if you're living paycheck to paycheck, are you surviving in this environment right now? Comment down below. Let me know your thoughts. We'll see what happens tomorrow. But every time I see these markets just soar back, it is, to me, more concerning and more scary watching these markets go up than when they go down. Because the higher this thing goes, the worse the crash is going to be.